Ray Dalio, a name that resonates not just in financial circles, but across the broader world of economics and global strategy. Dalio isn't just another investor. He's the visionary behind Bridgewater Associates, the largest hedge fund in the world, managing billions of dollars in assets. His success didn't come by chance. It's built on decades of studying patterns, identifying trends, and making bold yet remarkably accurate predictions. One of Dalio's most defining moments came during the 2008 financial crisis. While most investors were blindsided by the collapse of the housing market and the subsequent global meltdown, Dalio saw it coming. He had analyzed the growing debt bubble, the risky lending practices, and the economic fragility that others had ignored. His foresight not only saved his clients millions, but also cemented his reputation as one of the sharpest minds in finance. Since then, Dalio's insights have continued to shape how investors think about the markets. From predicting shifts in economic cycles to warning about geopolitical tensions, he's developed a reputation for identifying the forces that drive major changes long before they hit the headlines. And now Dalio has sounded the alarm again. His latest warning points to a potential economic crash, a downturn that he believes could fundamentally reshape the financial landscape we know today. But what makes Dalio's warning so compelling? It's not just the words he says, but the depth of analysis behind them. Dalio doesn't deal in speculation. His predictions are grounded in historical data, economic theory, and a profound understanding of how human behavior interacts with markets. When Dalio speaks, the financial world listens. And for good reason. Today, markets are buzzing with uncertainty. Rising interest rates, inflation fears, geopolitical tensions, and a rapidly evolving technological landscape are creating a perfect storm. Investors, businesses, and even everyday people are feeling the ripple effects. In this chaos, Dalio's voice cuts through the noise with a rare clarity. His message is simple yet urgent. Prepare now, or risk being unprepared when the storm hits. So what exactly is Dalio predicting, and what does it mean for all of us? Whether you're an experienced investor managing a portfolio or someone just trying to understand how these shifts will affect your day-to-day life, understanding Dalio's insights is critical. Today, we'll break down his latest predictions, explore the forces driving his concerns, and, most importantly, discuss how you can prepare for what's ahead. Because in times like these, knowledge isn't just power, it's survival. Buckle up, because we're about to take a deep dive into Ray Dalio's world. A world where cycles of boom and bust are as predictable as the seasons, and the ability to read the signs can make all the difference between navigating the storm and being swept away by it. Let's get started. To understand Dalio's predictions, we need to first look at what he's observing in the world around us. According to Dalio, our economy is currently being shaped by 5 forces, interconnected dynamics that are pushing markets toward a tipping point. Let's explore these forces in depth to see why he believes the next crash may be closer than we think. The first force is the sheer amount of debt in the system, coupled with rising interest rates. Around the globe, governments, businesses, and individuals are borrowing more than ever before. But higher interest rates make this debt harder to service. Dalio warns that this combination creates a volatile environment where defaults and market downturns become more likely. Next, there's the issue of internal conflict within nations. In the United States, for instance, economic inequality is fueling division and unrest. This isn't just a social issue, it has real economic consequences. Political polarization can paralyze governments, disrupt businesses, and lead to instability in financial markets. Dalio views this as one of the most underestimated risks in the current climate. The third force is geopolitical tension. The US-China rivalry is at the center of this. Trade wars, sanctions, and decoupling are disrupting supply chains and increasing costs for businesses. For global markets, this isn't just noise. It's a fundamental shift that could drive long-term economic pain. Then we have acts of nature. Climate change is no longer a distant threat. From wildfires in California to floods in South Asia, natural disasters are wreaking havoc on infrastructure, agriculture, and industries. Dalio highlights how these events add an unpredictable layer of risk to the global economy, further complicating an already fragile system. Finally, there's the disruptive power of technology. Advances in AI, automation, and blockchain are transforming industries. While these innovations create opportunities, they also displace workers and upend traditional business models. The result? A wave of volatility as economies adjust to this rapid pace of change. To understand Ray Dalio's predictions for the future, we need to take a step back and look at the past. Dalio is a firm believer in the idea that history doesn't just repeat itself, it follows cycles. These cycles, driven by human behavior and recurring economic patterns, have shaped the financial world for centuries. Dalio's work is rooted in studying these cycles, allowing him to anticipate future events by understanding the echoes of the past. Let's go back to the Great Depression of the 1930s. It was a time of unparalleled economic devastation. The stock market crash of 1929 was the tipping point, but the seeds of the crisis had been planted long before. Excessive borrowing, speculative bubbles, and a lack of regulation created an unsustainable financial system. When the bubble burst, it wiped out fortunes, led to widespread unemployment, and reshaped the global economy. Fast forward to the 1970s, a different era, but the patterns were familiar. The world faced stagflation, a toxic combination of high inflation, slow economic growth, and rising unemployment. The causes? Once again, excessive debt, poor economic policies, and external shocks like the oil embargo. The lesson here is clear. Economic imbalances, whether caused by unchecked borrowing or external pressures, eventually lead to correction. Then came the 2008 financial crisis, perhaps the most vivid example in recent memory. It was a classic debt bubble. Cheap credit fueled a housing market boom, creating an illusion of endless growth. But as Dalio and a handful of others predicted, the foundations were shaky. When housing prices fell, the entire system collapsed, triggering a global recession. Dalio's ability to foresee this event wasn't magic. It was the result of meticulous study of how debt cycles operate. Dalio explains that these crises are not random events. They're the natural result of how economies function. Borrowing creates growth, but it also creates debt. Over time, this debt accumulates until it becomes unsustainable. At some point, a trigger, be it rising interest rates, geopolitical tensions, or a sudden loss of confidence, causes the bubble to burst. The result is a painful period of deleveraging, where economies must reset before they can grow again. What's striking about these cycles is how predictable they are. Dalio has identified patterns that repeat over decades, even centuries. He often compares these cycles to the changing seasons. Just as winter follows autumn, periods of economic contraction inevitably follow periods of unsustainable growth. While the details of each cycle differ, whether it's the trigger, the industries involved, or the scale of the impact, the underlying mechanics remain consistent. The question then isn't whether another downturn will happen, it's when. Dalio believes we are currently at the tail end of a long-term debt cycle. The warning signs are there: rising interest rates, mounting geopolitical tensions, and increasing social unrest. If history is our guide, these factors are converging in ways that could lead to significant economic disruption. Dalio urges us to learn from the past, not just to understand what's coming, but to prepare for it. History shows that those who recognize the signs early, those who understand the patterns, are the ones who weather the storm and come out stronger on the other side. For Dalio, the study of historical context isn't just academic. It's a blueprint for survival and success in an unpredictable world. The most important question isn't whether a crash will happen, it's what we can do to prepare for it. Dalio's advice focuses on practical steps that anyone can take. He emphasizes the importance of diversification. By spreading investments across different asset classes, industries, and regions, you reduce your exposure to any single point of failure. So, are we ready for the next crash? That's a question only time will answer. But with insights from voices like Ray Dalio, we can better understand what's coming and position ourselves to weather the storm. What do you think about Ray Dalio's predictions? Are we heading toward another crash, or is this just a cautious warning? Let us know your thoughts in the comments below. And if you found this video valuable, don't forget to like, subscribe, and hit the notification bell to stay updated on the latest insights in finance and investing.